Good morning and a warm welcome to our fourth quarter and FY20 earnings call. I am Krishna Kiran from the Aurobindo Pharma Investor Relations. We hope you have received Q4FY20 and FY20 financials and the press release that were sent out yesterday. These are also available on our website. With me, we have our senior management team represented by Mr. T.V. Ramprasad Reddy, Executive Chairman, Aurobindo Pharma USA, Mr. N. Govindarajan, Managing Director, Mr. Sanjeev Dani, COO and Head Formulation, Mr. Santhanam Subramanian, CFO, Mr. Swami Iyer, CFO, Aurobindo Pharma USA. We will begin the call with summary highlights from the management, followed by an interactive Q&A session. Please note that some of the matters we will discuss today are forward-looking, including and without limitation statements relating to the implementation of strategic action and other affirmations on our business development and commercial performance. While these forward-looking statements exemplify our judgment and future expectations concerning the business development of our business, a number of risks, uncertainties, and other important factors may cause actual development and the results to differ materially from our expectations. Aurobindo Pharma undertakes no obligation to publicly revise any forward-looking statement to reflect future events or circumstances. And with that, I will hand over the call to Mr. Govindarajan for the highlights. Over to you, sir.
Thank you, Krishna. Good evening, everyone. The new fiscal year has begun with a lot of challenges that the global industry had ever witnessed. We are committed to protecting the health and well-being of all our stakeholders, including our employees and their families. We have enhanced the safety requirements across all our manufacturing units, including offices, by mandatory use of protective equipment, maintaining the social distancing norms, as well as other preventive measures. Within a couple of days of announcement of lockdown, over 1,500 employees were enabled with virtual remote access. Our manufacturing units continue to function at healthy capacity utilization levels. On a whole, we are truly happy to see our colleagues rising up to the challenge to ensure business continuity. We will now discuss the results for the fourth quarter and full financial year of 1920 declared by the company. For the year, the company clocked a revenue of 23,099 crores, an increase of 18% over last year. The EBITDA before forex and other income increased by 23% year-on-year to 4,864 crores. EBITDA margin for the year was at 21.1%, an improvement of 90 basis points over corresponding previous period. Net profit increased by 20% year-on-year to 2,831 crores. In Q4FY20, revenue increased by 16% year-on-year to 6,158 crores, led by healthy growth in our key markets. The EBITDA before forex and other income stood at 1,342 crores, an increase of 27% over corresponding previous period. EBITDA margin was at 21.8% for the quarter under review, witnessed an improvement of 180 basis points over Q4 last year. Net profit stood at 850 crores, an increase of 45% year-on-year. In terms of the business breakdown, formulation business in FY20 witnessed a growth of 24% year-on-year to 20,012 crores and contributed around 87% to the total revenue. API business contributed for the remaining balance of 13% and clocked a revenue of 3,083 crores. For the quarter, formulation business contributed 88% to the total revenues and clocked a revenue of 5,401 crores, registering a growth of 23% year-on-year. API business clocked a revenue of 756 crores and contributed remaining balance 12%. In the formulation business, US business posted a growth of 27% year-on-year to 11,484 crores in FY20. On a constant currency basis, US business increased by 26% year-on-year to around $1.62 billion, led by improvement in volume and new product launches. For the quarter, the revenue from the US market increased by 21% year-on-year to 2,990 crores. On a constant currency basis, US revenue increased by 17% year-on-year basis to $430 million. We have received final approval for 6 ANDAs and launched 4 products in the quarter under review. For the year, we have received approval for 22 ANDAs and launched 34 products across oral, injectable, and OTC segments. We have filed 17 ANDAs during the quarter and 55 ANDAs for the year. Revenue of Aurobindo Pharma USA, the company marketing oral products in USA, has increased by 17% for the year and 10% year-on-year for the quarter. Revenue of Aurobindo, the injectable business, witnessed a growth of 30% year-on-year to $277 million for the year and declined by 9% year-on-year to $59 million for the quarter. Aurobindo sales for the quarter has been impacted due to reduction in hospital procedures on the back of COVID-related issues and incremental competition on Metropenem. We filed a total of 131 injectable ANDAs as on 31st March 2020, out of which 73 have received final approval and the balance 58 are under review. The company as on 31st March 2020 has filed 586 ANDAs on a cumulative basis, out of which 397 have final approval and 28 having tentative approvals, including ANDAs which are tentatively approved under PEPFAR program, and the balance 161 ANDAs are under review. Europe formulation revenues clocked at 5,922 crores in FY 19-20, an increase of 19% growth over last year. In euro terms, the revenues grew by 22% year-on-year. For the quarter, Europe formulation revenues clocked at 1,653 crores, registering a growth of 26% over corresponding previous period. In euro terms, the revenue increased by 26% year-on-year. Growth markets witnessed a growth of 14% year-on-year to 1,355 crores in FY 19-20. On a constant currency basis, growth markets reported a growth of 12% year-on-year. For the quarter, growth markets grew by 30% year-on-year basis to 377 crores. On a constant currency basis, growth markets reported a growth of 27% year-on-year. In FY 19 and 20, ARV formulation business grew by 29% year-on-year to 1,251 crores. On a constant currency basis, ARV revenues witnessed an increase of 27% over the previous year. In Q4 FY 20, ARV revenues grew by 31% year-on-year to 382 crores. On a constant currency basis, ARV revenues witnessed an increase of 27% year-on-year. In terms of segmental classification, US formulations contributed to 48.6% of the overall revenue in Q4 FY 19-20 versus 46.9% in Q4 FY 18-19. Share of EU formulations increased to 26.8% in Q4 FY 19-20 versus 24.8% in Q4 FY 18-19. Growth market share increased to 6.1% in Q4 FY 19-20 versus 5.5% in Q4 FY 18-19. Share of ARV segment increased to 6.2% versus 5.5% in Q4 FY 18-19. API business contributed at 12.3% of the total revenue in Q4 FY 19-20 versus 17.3% in Q4 FY 18-19. R&D expenditure is at 239 crores during the quarter, which is 3.9% of the revenue. For the year, R&D expenditure is at 958 crores, which is 4.1% of the revenue. Net organic capex for the quarter is around $37 million. The closing rupee versus US dollar rate was at 75.665 rupees in March 2020 versus 71.385 in December 2019. The net debt has decreased by $87 million quarter-on-quarter to $359 million at the end of March 2020. On a full year basis, net debt had reduced by $365 million. The majority of the company's debt is denominated in foreign currency. The cash and bank balance is at $376 million. The average finance cost is at 2.1%, mainly due to availing multiple currency loans. This is all from our end, and we are happy to take your questions now.
Thank you very much. We will now begin the question answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We take the first question from the line of Nithya Subramanian from Bernstein Research. Please go ahead.
Hi, thank you. So congratulations on a good quarter. I had 2 questions. One was on your R&D spend. So I think in one of the previous calls you had guided for more like 5% R&D spend, but we have seen that trending lower in the recent quarter as well. So if you can help us understand if any programs were delayed in the current quarter, as well as give us some color on what it could look like for the next fiscal.
Yeah. Basically what we had said in the past is, I think it would start increasing once we start clinical trials for both the differentiated portfolio as well as biosimilars. Actually, in fact, the next year, we expect it to be around 5.5%. That's our expectation. When actually some clinicals for the biosimilars as well as depot will happen.
Understood. My next question was actually if you can throw again light on the current status of the various plans which are under the FDA scanner. When do you expect resolution for the various plans?
Okay. As far as Unit 7 is concerned, we've had a discussion with the FDA in the mid of April. In fact, we had a audio conferencing with them on mid of April. We have completed the CAPAs which we have submitted, and the last update was shared to FDA yesterday. We'll be working with them in terms of the further course of actions. That is as far as Unit 7 is concerned. As far as Unit 1, 9 and 11 is concerned, in fact, before I progress on 1, 9 and 11, as far as Unit 7 is concerned, it is the OA status. As far as Unit 11 is concerned, it is a warning letter, whereas 1 and 9 are under OA. In fact, we have completed all our actions and including the consultant certification of the completion of those actions by November mid, and we have submitted those documents to FDA. On a logical term, we would have expected the inspection to happen by the first quarter. With the current situation, I think it is getting delayed. We had actually requested for a desktop review, and we'll be working with them in terms of whenever they could do that, and we'll move ahead with that.
Is the FDA now open to doing remote inspections like this?
To the best of our knowledge, we are working on those procedures is what we understood from the various forums, whatever we have read and what we have heard. Whenever they are completely ready, we'll be progressing on that. There are no definitive timeline we'll be able to comment on that, but in our considered opinion, that should start anytime in the next few weeks or so.
I'm sorry, just a clarification. The desktop review that you mentioned is actually for Unit 11, right? The one under 1 11.
We had already submitted for the desktop review request for 1, 9 and 11. Unit 7, we have submitted our final response yesterday after completing those CAPAs. I also would add that we have received the OA status for Aurobindo only recently. These are the three aspects of it. As far as Unit 7 is concerned, since we have submitted our final response yesterday, we'll be working with them in terms of the further course of action. As of yesterday, the desktop review has been sought for 1, 9 and 11.
Understood. Thank you.
Thanks, Nindya.
Thank you. We'll take the next question from the line of Neha Manpuria from JP Morgan. Please go ahead.
Thank you for taking my question. First question on the U.S. business. Two parts. One, did we see any benefit in our oral solid business from upstocking in March? Second, given the high base we are in and a few of our facilities are still under pending review from the FDA, how should we look at approval momentum both for the injectable business and the oral solid business?
Okay. Yeah, thanks. Go ahead, Swami. Go ahead.
Yeah. Okay. Thanks, Neha. We have seen some uptick in volume in U.S., especially in respect of oral solids and nutraceutical. The kind of drugs that went up was mostly the antibiotics, antivirals, and some of the long treatment routine drugs. Primarily, we believe that customers are increasing the inventory level in preparation for the disruption, and higher number of 90 days scripts was another point which was responsible probably for the surge. Then there were also opportunities that is created when other companies probably had some supply issues. Those are primary reasons. We saw certain surge in the demand.
And would this have disproportionately benefited the 10% year-on-year growth that we reported in the oral solid business?
What I would like to say here is, on an overall basis, we also saw some tepid growth. There was some demand was lower in terms of injectables, like Govind explained. This is primarily due to the COVID-19. But as far as the oral solid is concerned, I think we have a good base. We have a number of products that we will be monetizing. We are looking very cautiously, in an optimistic way going forward.
And how many launches should we expect, sir? I think we did 34 launches, right, for in FY20. What's the number we're looking at in the FY21?
We expect to launch around Swami. So we are expecting to launch around 50 to 60 products now this year.
This is including injectables, right, sir?
Including everything.
Okay. And irrespective of the facility status, Unit 7 and the API facility.
Yeah, considering that only we have talked about this number, Neha.
Understood. My second question.
Out of the 50 to 60 products what we are talking about, Neha, 26 products have already been approved.
Oh, okay. Fair enough. Okay, understood, sir. And my second question is on the gross margins. This quarter the gross margin was, pretty strong quarter on quarter. Especially given, some of our lower margin businesses like ARV or Europe, they contributed to growth. So how should we look at, is this the new base for gross margin given the currency benefit, or, is there any one-off number that we need to adjust for in the gross margin?
So, the gross margin during the quarter has improved across all geographies, namely US, Europe, ARV, API, everywhere. See, apart from the main reason is the good product mix within the geography, and also we carried low cost of material because of the low cost before the COVID as on 31st December 2019, and also the rupee depreciation has helped us out. So, as every rupee depreciation will improve the gross margin as well as the EBITDA by about 30 to 40 crores. That's the thing. And even some of the products as explained for me, in the oral segment also has improved. The gross margins have improved. So we are been informing in the past, our gross margin will be of the order of around 58%. Even when we are 55, 56, our target is to move towards the normal margin of around 58, and that's where we think will be around 58 to 59, depending, based on the new currency rates.
Understood. Thank you so much, sir.
Thank you. We take the next question from the line of Surya Patra from PhillipCapital. Please go ahead.
Yeah. Thanks for this. So congrats to the good set. So just on the US business front, if you can just update, since it is a year closing, what is in the progress of this natural and all? And also if you can indicate the injectable numbers, so excluding the spectrum, what is the kind of progress that we would have seen in full year FY20?
Swami?
Yeah, sure. So Natrol, I don't know what exactly is the specific question, but Natrol had a very healthy growth in the current fiscal. We are seeing continuing growth so far. Probably one of the reasons could be because of COVID-19. And as far as the injectables were concerned, Govind already mentioned at the call that we had an increase of about 30% year on year. However, we have to temper this with the current situation where the demands have dropped because of non-performance of the elective surgeries, and once it comes back, the real demand will come back. So I just have to temper with it, but clearly on a year-to-year basis, we had good growth.
Okay. I would also add to what Swami said, we still maintain our market share. Is it fair to say, Swami?
That is correct. So we still, in terms of volume, we still maintain the market share compared to the overall market. Yeah.
Okay. Just
overall, IMS market share itself has fallen 43% going April and May.
Okay. Sir, I was trying to understand even without factoring the spectrum that we acquired, what would be the growth in the injectable business for the full year?
Yeah. So the spectrum was not part of, when we talked about injectable, what Govind mentioned as 30% growth is primarily in Aurobindo. Spectrum, we treat that as a brand, and for the purpose of discussion, we are not including that as part of injectable.
Oh, that's great, sir. My second question would be on the European performance. Yeah, so for across everybody that we have witnessed, there is a kind of a positive surprise in terms of revenue performance there in Europe. So On that EBITDA performance, where we have reached, factoring all the kind of recent acquisition and all that, and at what is the EBITDA level that we should be closing this FY20 year in case of Europe?
So without Apotex acquisition, we were already into double digit as a percentage to sale. And because Apotex business was a loss-making one, and we expect that Apotex will break even in the second half of this year, FY21. So I guess it will still not make such a big difference because the business is only a fraction of original business that we had, say approximately 10 to 12%. So I guess we may improve EBITDA margin again back to the double digit of our percentage to sale. Okay. Sir, is it possible to share some specific number that how have we progressed, let's say, last couple of years? Because the profitable progress of Europe, that can really support the overall earning performance and margin performance meaningfully, considering the level at which they are currently. So if you can directionally give us some sense that, okay, compared to last year, what kind of expansion that we would have seen and what is our outlook going ahead for, let's say, current year, FY21? Yeah, because, there is no like-to-like comparison, so it will be difficult to quantify as an improvement because Apotex business was, we integrated only about 13-14 months back. So if you look at that, I would imagine that earlier we were at about 12% operating margin. Then with Apotex integration, it just remained between 9 to 10, and then again we'll go back and plow back to about 12-13%. Sure, sir. Just one last question on the US business front. Govind sir, if you can just give us some sense about how progressively that we are thinking about upgrading our portfolio, the kind of pipeline that we have been working on, either on the inhalers or the biosimilars or the patches. So how quickly or in what manner that we should be seeing the portfolio upgrade for US business, and how can that improve our overall earning efficiency for US?
Yeah, I think I'll talk about the pipeline, and then as far as the margin expansion, once those approvals happen, obviously, I think we would expect the margin to expand. So from the inhalers perspective, we are developing 8 inhalers, including 6 MDI inhalers and 2 DPIs. And as far as nasals are concerned, we are currently working on 6 nasal sprays, and out of which 2 products have been already filed during the quarter. And as far as the topicals are concerned, 31 products in the topical section at various stages of development. And transdermal, I think we are developing 8 transdermal patches as well. Apart from that, you're also aware about the pipeline on, let's say, biosimilars, which should be currently we are focusing on 5 products, but ultimately, I think our overall portfolio, we are on 14 products. And so I think as far as Depo is concerned, I think we are actually filing into the FY21 in terms of the first product, and subsequently every year we'll be filing at least 1 or 2 variants as well. So we have enough products in the differentiated or the specialty portfolio, and if you have seen the timing as well, I think every year you will start seeing some progression in terms of the portfolio as well. So what is important is to start getting those approvals, and obviously it will have a positive impact in terms of the overall margins as well.
Sure, sir. Okay. Thank you, sir. Thanks a lot.
Thank you. We take the next question from the line of Nitin Agarwal from IDFC Securities. Please go ahead.
Hi, thanks for taking my question, sir. Govind, just continuing on from you talked about the biosimilar bit. On the biosimilars, can you help us understand a little bit more about the thought process? We already talked about shifting the biosimilar business into a 100% sub, and we talked about raising money in that business. So what is it? So if you could probably just help us understand how is Aurobindo looking at biosimilars over the next 3 to 5 years, and and what kind of trajectory from a monetization perspective should one assume on the business?
Yeah, I think the whole objective of creating a 100% sub is because of the fact that one is obviously you'll have better focus and better review in terms of being a separate entity. Obviously, on a long-term perspective, at some point in time, we'd like to unlock the value. That is the whole objective as we have done this particular exercise. And so right now we already got 5 products which are being progressed. Out of these, the first 2 products, I think we would be filing the product towards the end of this year or early next year. So obviously those first two products will be filed for Europe, which has a fixed timeline of 210 days for approval if everything goes well. So obviously the subsequent year it is going to get launched. And we are also progressing the ophthalmic product as well, like I think which we are expecting to start the phase 3 clinical trial early next year, and subsequently the filing would happen for both EU and US. And there are other 3 products also being progressed parallelly. The whole objective is, like, I think when we are talking about, like, even getting some partners, we would do it at an appropriate time after succeeding on certain of the initial exercises, whatever we have done. So that will actually improve the overall, image of the particular division as well. So that's the whole objective.
And Govind, do you have any broad sort of sense in terms of at what stage will this business start breaking even for a sense in terms of the way you see this thing, the business progressing in terms of revenue contribution?
I think, as I told you, that towards the end of this year or beginning of next year, those first 2 products would be filed, and within 7 months at least, in 7 months we should expect approval. So the revenue will start
22.
Yeah, so in FY22, yeah, 2022 we should start earning revenues once the approvals in the Europe happens. As far as standing alone on their own feet, like I think subsequently it would take only 2 years by the time 1 or 2 more products also will be launched across the globe. So definitely, like I think they'll be self-sustaining is what I would say.
Okay. And secondly, can you just update us on your plans for China? And if some of the recent developments will impact any of those plans?
So as far as China is concerned, like you are talking about our filing from China?
Yeah, for the clients we were looking at setting up 2 or 3 different manufacturing facilities in China and partnerships and otherwise. So just a broad brush sense on how we see China over the next 3-5 years.
Currently for the Chinese market, we already started filing products from India, and the construction of our own oral formulation manufacturing facility is going on. And we expect to take the exit batches by the second half of FY21. And also you are aware of the joint venture which we have signed in the last around 1.5 years or so, where we have seen, in fact, we have seen certain price correction in terms of the set of products in the tender, but we will get more clarity as we get more closer to the launch is what I would say. Okay. But we are not restricting ourselves only for tender business. We'll also look at the other, the private business as well as we progress.
We have only 2 plants. One is oral plant and one is the joint venture. That's all.
Okay, sir. And lastly, Govind, on the US, this year we had a fairly strong filing rate, about 55 odd ANDAs that we filed. What is the kind of run rate are we looking at for filing going forward?
I said current year we are expected to file around 50 to 60 products. Current filing around 50 to 60 products will be filing.
And that's a run rate you could be able to maintain for next couple of years or going forward also, or this is like
at least 50 products over the next 2 to 3 years we can consider Nitin.
Okay, and one last thing if I can squeeze in. On the balance sheet, we had a very, very strong improvement this year on cash flow generation. Now, how should we look at the balance sheet going forward in terms of when? Do we aim to become debt free over in a certain period of time, or there are opportunities for us to invest back into organic growth or into inorganic growth? How are we looking at the whole balance sheet picture now?
Yeah, Subbu will give the answer on the debt part first. Subbu, go ahead.
Yeah. So Nitin, we have said at the beginning of the year we will go and then make it a debt-free company by 31/3/23. The way we have done an accelerated performance last year, now we are advancing this to 31/3/22. Also, we are trying to ensure between $200 to $250 million. We will be reducing the debt from the existing business. We are planning to do that. As regarding the other one, Govind can answer.
Yeah. So your query is more in terms of the deployment, Nitin?
Yes. How do we see usage of cash now? Given the very strong cash flows which are there, going forward now, apart from debt reduction.
Yeah. The first objective is the debt reduction, but we'll also have CapEx, which is to the extent of 150 to 200 million we will have this year as well. And as we move forward with the growing business, we also need some capacities. That is where we will start with this. In fact, I think we'll get better clarity in terms of deployment once we retire the debt like we will plan in terms of the further plan, course of action.
Okay. Thank you and best luck.
Thank you.
Thank you. We take the next question from the line of Shyam from Goldman Sachs. Please go ahead.
Hi. Thank you for taking my question. Just the first one on secondary data that we're seeing for the U.S. in terms of volumes for both industry as well as Aurobindo, kind of down, I think, 18-20%. So I'm talking about April, May. So are you seeing similar trends at the primary level, or do you think there are other levers that actually ensure that the drop is not that significant? I'm talking about the U.S. business.
Yeah. Swami, you want to take that?
Yeah, sure. So, Shyam, thank you. We had a very good growth in the last quarter, especially in the month of February and March in terms of oral solids. We have increased the number of tablets, number of doses that we give. In fact, year on year, it's gone up by about 24%. We see continuing growth, but however, I again want to temper this. March was an extraordinary month. We continued doing well in April. We obviously need to understand that it may not be as high as March, but we are continuing to do well in terms of volume.
Swami, the point being that market share is something that one should look at rather than, and that you're seeing we are able to kind of sustain for the products that based on the demand.
We have had consistent increase in market share in terms of volume, and we see no reason for any decrease in that.
Got it. Thank you. My second question is on the injectable number. I think it comes to about 59 million for the quarter. And we were doing between 70 to 75 million a quarter before that. So is that the lost sale because of COVID impact, and we can probably go back to this run rate during the course of this year?
So, as far as injectable is concerned, first we should understand the extraordinary situation we are in. There is a drop of about over 80% in elective surgery, and then there's been drop in the volume growth, significant amount of volume growth drop. We are in line with the overall percentage that we have been maintaining. So this is one reason why there's a fair amount of drop. This is a significant portion of it. And in addition to that, there was pricing pressure in one-off products. So this has also contributed to the overall degrowth. We believe that over a period of time, at this point, we cannot commit anything or say and how soon this is all going to come back. We believe overall, considering the market, we continue to do that.
Just to add to what Swami said, in fact, we just started the backline, but that impact also would not be seen because the hospitals have not opened up fully. So that also would be seen as Swami was explaining.
Yes.
April, May, June is a lot of fall in the sales in the injectables because of what Swami told us.
Yeah, in this quarter could be slightly lower than even last quarter, but overall, as we progress, I think we should start seeing the recovery. That's what even Swami and Mr. D are talking about.
Got it, sir. Thank you. And the last question is on branded oncology. So we have now seen 1 year of this acquisition almost. Right. So just wanted to get a sense of how this portfolio has progressed. And given that now Sandoz is no longer there, from an M&A perspective, is there any specific areas or geographies that you would like to do, not do, whichever way?
So I can take the first question, Rohan. So as far as the numbers are concerned, we are very happy with what we have got. I would say top line wise, we are on target, and then we are doing well. And we are quite pleased with the profitability of the product so far. So that's what I would say. Overall, it is a good acquisition. That's all I would say at this point of time. And as far as the M&A is concerned, I would leave this to Govind.
Yeah, before we start talking about the M&A, Swami, you'll also agree there could be some challenges for this quarter as we see for Apotex also. I'm just clarifying because the same footfall in terms of the hospitals, it will have impact. But as we progress, I think that also should get normalized. So, Shyam. So as far as M&A is concerned, I think we are not currently evaluating or looking at any large ticket items. But if we would be happy to enrich the pipeline of companies like Aprotek by getting some grants, if it is available at let's say like $50 million around level, like I think we would still be evaluating those options, or any new technology platform which can enhance our portfolio, would be happy. So because we have enough in our pipeline where we don't need to chase technically any portfolio other than this particular branded business.
Got it. Thank you and all the best.
Thanks, Asha.
Thank you. Next question is from the line of Tarang Agarwal from Old Bridge Capital. Please go ahead.
Hello, sir. Good evening. I have a couple of questions. So when I look at the balance sheet or the net debt, the cash balance has, increased substantially over the last 3 years from 500 odd crores in FY17 to 2815 as on 31st March. So what's the group's thought process around holding this cash, and how should we look at it going forward?
So this is a specific case, because as on 31st March, we are planning to do the Sandoz deal, so we have accumulated cash for that purpose. Since it has not done, it will be deployed in the coming quarters as it progresses.
So we should see that number going down going forward?
Yes.
Okay. The next question is, if you could give me a sense on Aurobindo's RX share in the US generics as per the last 12-month data.
It's around 9%.
Okay. Thank you.
Thank you. We take the next question from the line of Damayanti Kerai from HSBC. Please go ahead.
Hi. Thank you for the opportunity. I'm coming back to Spectrum. So obviously, fourth quarter has seen impact of COVID disruption. So once the situation normalized, how we can see ramp up from 100 million sales which Spectrum portfolio did in FY20, and how many products we are planning to add to the portfolio?
More or less, our first quarter sale is down 20%. Otherwise, we are adding one more branded product we are launching in middle of this year. Otherwise, in the quarter four, sale is at par with the overall average of the 25 million approximately. So there is no much difference.
Okay. Actually, I just tried back calculating your FY20 number and 9-month number. So earlier, you clocked around 25-30 million, and I think it was much lower in the fourth quarter. So that's why I asked this question.
Fourth quarter is around 24 million our sale. So it is at par with the overall other quarters. And I'm more quarter one of 2021 is less, around 15-20%, and where it will be easily go back to the normal levels and some improvement. And we are launching one new product in middle of this year.
Okay. And during the Spectrum portfolio acquisition, we mentioned about some milestone payment which should be made for some 2 particular brands. So have you started paying milestone for Markibo and Capillary brands?
No, still we have not reached to that level, so we are not yet paid.
Okay. And for the Spectrum portfolio, we have already achieved cost breakeven, and it's a profitable portfolio, right?
Oh, yeah, definitely.
Okay. And my next question is regarding some of the differentiated opportunities which you mentioned where Aurobindo is working. So are we working on the capacities also, or we have enough to reach some critical level? Say once we start launching, and then we'll work on the capacities also.
On the specialty portfolio, as we progress, we have started creating capacities, like biologics capacity, vaccine capacity, depot injections. We already started having that area earmarked in Unit 4 already. I think so as we progress, and as far as the other portfolio, North Carolina already is ready in terms of accommodating that portfolio. So capacity is not an issue per se.
Okay. And we have a couple of approvals on the ophthalmic portfolio. Have we launched those products or not yet?
We launched 3 ophthalmic products last 1 year, and maybe next year onwards we will launch more products.
Sure. My last question is, we have seen very strong growth in other formulation verticals such as ARV and ROW. So is fourth quarter more of COVID-related stocking up phenomena, which we have seen for the US market, or we should be seeing fourth quarter number as more indicative of performance in coming quarters?
At least on the ARV front, I can tell you it is not related to COVID at all because that is a standard business. And since we have gone into dolutegravir as well as its combination, I think that has been ramping up is what I would say. In my opinion, that should continue to grow.
Okay, sure. Okay, that's broadly from my side. Thank you.
Thank you. We take the next question from the line of Prakash Agarwal from Axis Capital. Please go ahead.
Yeah, thanks. Good evening and congrats on good numbers.
Thanks, Prakash.
Yes, sir. First question on, what has really led to this kind of strong growth in the oral solid business? Would it be the portfolio range that we have or, the supply chain ability to put in inventories, or what has really worked for us? Because we have seen other larger companies the growth has not been to that extent, especially in the oral solid side. What has worked well for us?
Yes, Swami, would you like to answer? I would like to, before Swami starts, I would like to say, in fact, I would like to take this opportunity to thank all our employees who are really, made it happen in terms of the business continuity and in spite of the various challenges. Over to you, Swami.
Yeah. So thanks, Prakash. So the first thing I would like to say is the nimbleness of the supply chain that we have, the capacities that we have created. So this has been very useful in getting the opportunity in terms of revenue. So we have done well in terms of that, though we had some transportation challenges. But overall, I think it is the broad breadth of portfolio and the supply chain ability to meet the demands and the sales team in the US, which has contributed quite a bit in taking up these opportunities.
Fair enough. Understood. And how much of this is sustainable both for, the oral solid business and also previous participant asked on the ROW and Europe side? Since, we understand that the prescriptions from doctors will, increase from 30-day prescription to 90-day prescription. So when we enter, say, April, May, has the volume trends similar, or as the previous participant asked, it has come down by 10-20%?
I think so. We have like to look at it on a month-to-month basis because this gets spread out. 1 month could have a huge surge, and obviously when the stocks are available, other months could be lesser. But on an overall basis, we feel confident that the volumes have grown and it remains somewhat close to that, barring few aberrations.
Okay. So growth will continue. Maybe the rate might little bit taper because of the significant pre-buying already been done. Would that be correct understanding?
So what I would say is understanding on the overall basis, if you look at it probably on a yearly basis, we would have a fair amount of growth, and we don't see a problem in that. I also mentioned that we have 24% growth in terms of number of doses that we gave. We have increased the number of customers. So we believe we have everything in place for decent growth.
Okay. And you're not sequentially?
Yeah. So we want to see the April to June quarter because April is good, May is little dull, and June maybe little dull. And maybe we are sure that we will be back from July onwards.
Perfect. That helps. Thank you so much. And second question is on, if I see your gross profit, that has increased by around 300 odd crores, and same is the proportion with the formulation business, about 300 crores. So the sales mix obviously improved, but the kind of gross profit improvement is much larger. So only sales mix is not explaining. And we've always maintained there's not a single product that moves the needle. We are a broad-based company. So what has really moved the needle here? I mean, sales mix, very marginal, I would say. Currency would be there, but not to that 300 crore extent. So if you could explain the 300 crore sequential up move, that would be helpful.
I think Subbu had already explained it. He will repeat that.
He said three things which I heard, but if you could give more clarity. He said sales mix, currency and product mix. So I am not able to understand the product mix.
One thing also which I missed out, Prakash, I said the carrying cost of the inventory as on 31st March was lower at a low currency rate, and then we sold it at a higher rate. So that also would have helped you, no? Because the carrying cost is lower.
Okay.
I mean, maybe off the line we can talk about it, how it has built up, because it's a too detailed one. Because we have multiple geographies, multiple products, and multiple business segments.
Okay, perfect, great. And you are guiding that you would be at a 58% plus minus gross margin going forward if the currency remains similar levels.
Yeah, we have said that long time back because that's our goal, and we have been moving towards that always. That we have said long time back.
Okay, perfect, great. Thank you so much and all the best.
Thank you.
Thank you. Before we take the next question, I'd like to remind participants, please limit your question to 2 per participant. You may rejoin the queue if you have a follow-up. We take the next question from the line of Dinesh Mehta from Research Delta Advisors. Please go ahead.
Yeah, thanks for the opportunity and congrats for great numbers. I have actually a question on if you can just let us know what is the amount of factoring you have used to kind of monetize the receivables in FY20?
Yes. Yeah, we have a little over 400 million that we have used for selling through the AR. It's between 400 to 500 million.
I'm sorry, it is 400?
He is asking about the last year, Swami, specifically.
What exactly is the question, Govind?
He is asking about, I think in the debt reduction, how much is it because of factoring is what he's asking in terms of the last year. So let's, Subbu, you want to take that?
Last year, maybe another 100 million.
No, sir. Subbu, go ahead, Subbu.
You cannot consider, the factoring as a process, we always go and then use factoring for the additional growth coming, where we need to invest money in the chargeback, which is, that's the only reason we go and do factoring. And factoring is not very low compared to what we have achieved the overall reduction.
If I look at your cash flow statement that you published, there is this financial assets monetization of almost 1270 crores, which just would be for factoring. So, and that would be the difference between the last year outstanding factoring versus this year's outstanding factoring. The actual number will be even larger than that. Is that my correct understanding, or how do you?
No, it's not the correct understanding. I'll tell you, you are looking at the trade receivables 4,315 crore versus 3,414 crores. Am I right?
No. I'm looking at the cash flow statement, and under that we have mentioned that decrease in financial assets. Under the working capital operation, cash flow from the.
No, that we have explained in the last quarter itself. We have the coverage ratio, which we have earlier had 100% of the customers, we reduced to 60%. That's the reason why it has come down this year. Whereas if you really see, it has moved up in the trade receivables. The trade receivables is now more. I think it is at 4,315 crore versus 3,430. You have to read together. You cannot read it separately.
So if I understand well, I mean, what you are trying to say is that we reduce the factoring or we increase the factoring? I mean, between last year and this year?
You look at it like that, 4,315 plus 40 crores, which is 4,350 crores.
But sir, that is
413, and if you read it together, it is more or less the same.
So the factoring is, we just net it off from the receivable, right? So that number will never be reflected in the receivable number.
No, it is right. No, it's for the chargeback. So really we do not go on for everything there is a price to that. Nothing comes free. So it depends upon what is the sales growth, what is the additional chargeback investment we are doing. To that extent only we will do, because we are not need to pay this money.
Look, that I understand. What I'm trying to say that if I look at the receivables, that will not tell me the amount of factoring you have done.
It's a standard practice. If the bank is downselling their loan, they don't go and then give what's the downsold amount.
Right. So how to read the factoring amount between this year and last year is the question actually. Because the receivables will be net of factoring, and that will not tell us the story of
Subbu, I have a suggestion between you and Manish, if you can just have another specific call to address in terms of what is queries are, so that we have minimal time for others to ask their questions, please.
Okay. Fine. Yeah, thank you.
Thank you. Next question is from the line of Chirag Dagli from HDFC Mutual Fund. Please go ahead.
Janice, can I go ahead with the next one, please?
Mr. Chirag Dagli, your line is unmuted. Please go ahead, sir, with your question. Looks like no response from the current participant. We take the next question from the line of Dipen Mehta from Accelerator Equities. Please go ahead.
Yes, sir. Congratulations on great set of numbers. Only one question I have is, how are you reading the US generics market now in terms of price erosion? Has it come off, and how are you basically tackling it?
I think we've always maintained that whenever we look at the market and whenever we look at the erosion, we consider around 5% as a nominal erosion, which we should consider for those products which have just come out of the shelf of generic. I'm not talking about those old products which have already eroded. So to that extent, I think currently we are seeing less than that, but generally we consider the 5% as our benchmarking.
Okay, sir. Thank you and all the best.
Thank you.
Thank you. We take the next question from the line of Tushar Manudhane from Motilal Oswal. Please go ahead.
Yeah, congrats on a good set of numbers. Just would like to understand on the biosimilar side, how much investment you have made till date in terms of CapEx and R&D separately?
Subbu, can you provide that number right away, or if you have it?
Yeah, I will give it to you, Tushar, separately. I don't have it right now.
Yeah. And you referred to have higher R&D spend as a percentage of sales for FY21, but just would like to understand whether the clinical trial can happen during this COVID phase, or it will be more in the second half of FY21.
Yeah, I think we have said, I think towards the end of the year, we expect the 2 products phase 1 to be completed. Extended phase 1 for Europe, we expected towards the end of this year or beginning of next year it will get concluded. That's the first set of clinical trial. As we are talking with the phase 1 clinical trial is going for 1 more product, but then ultimately that will get into phase 3 as well. So we expect these 2 first set of products for Europe, which would actually, the trial will get completed by the end of this year or beginning of next year. That would get filed first in the Europe.
Okay.
Yeah, Tushar, just to give you, the investment is anywhere between 400 to 500 crores.
Okay. And R&D spend?
R&D spend currently is more in terms of the revenue expenses because the clinical trial is just now is starting. So last year, I think if you remember, it was approximately $11 million or so is what we are spent. Yeah.
Got it. And just one last clarity on this Unit 7. So you said that you completed the CAPA and you had a call yesterday. So
yes,
for Unit 7.
Yeah. Go ahead, sir. Unit 7.
So is there a request for even desktop review for Unit 7 as well?
Sir, we have submitted our last set of data only yesterday, sir. So first we would like to give them some time to digest it, whether they have any queries on that before we further progress on that request, please.
Okay.
Thank you. We take the next question from the line of Kunal Dharmesha from Systematic Shares. Please go ahead.
Thank you for taking my question. So my first question is on portfolio overlap between US and Europe. I think we have 201 products in US and 284 in Europe. How much will be the common products, and if there is significant overlap, are we supplying it from the same plants or the plants are different? That is the first question.
Most of the US products would be there in US as well. Most of the Europe products would be there in US as well. That is the first point I would like to say. As far as the plant is concerned, right now, I think it is common for in terms of Unit 3 and Unit 7, because Europe products can go from Unit 3 and Unit 7 as well. From a dedicated facility, Unit 15, which is in Vizag, that is only for European market.
Okay. And there will be majority. So 201 products will be there for Europe as well. The same US product that we have.
Yes.
Okay. And second question is on China. So you alluded to the other channels other than the tender. So what are those other channels in China, and how are pricing behavior in those channels, and how does having a plant in China exactly help?
Yeah, I think the regulation has changed in terms of like having a preference in terms of FDA inspected, FDA filed product and FDA inspected facility in China would get a preference in terms of expedited review. That is the reason like it makes more sense to have a facility in China. That is the first aspect of it. In terms of pricing in the other market other than tender, it is attractive. That is the reason we are moving ahead with it. But in terms of specifics, we will have more clarity as we go closer to the filing and launch.
Okay, and if we have to divide the Chinese market into those channels, what would be those channels? I mean, just broad colors, and if we have to divide it in those channels, can we have the proportion of market that is there in each of these channels?
Mr. Reddy, would comment on that?
Ultimately, this plant will go to the Chinese requirement. Up to that, we may use for China some percentage, Europe some percentage, and some for US percentage. But in the end of the day, it will go to the Chinese requirement. Based on the market improvement in China, some in the tender, some in the still promotion products or something. This way we are following.
His question is in terms of channels, sir. Apart from tender, in terms of like, I think, what are the other channels available in the
So we are doing some promotion activity which is the products which is not in the tender products, those special products also we are planning to register, and we have through distributor doctor promotion we are planning to go.
Okay, that kind of partially answers my question. But the question was more on how the market is distributed between the channels. Some color, the tender makes up for a bigger.
At present, the tender market is not more than the overall, the value-wise, it is not more than 10-15%. Still, major generic market is still with the distributor and promotion market in China. But slowly, in next 3 years, it will cross 50-55% level, something tender market. But now they have limited products and at the low price. They made some products, but there are still lots of products out there.
Okay. Thank you.
Thank you. Well, ladies and gentlemen, that was the last question for today. I would now like to hand the conference over to Mr. Krishna Kiran for closing comments. Over to you, sir.
Thank you all for joining us on the call. If you have any questions unanswered, please feel free to keep in touch with Investor Relations.